I love walking around and getting lost. Never been here before. I don't know where I am. But I wanted to talk today about your portfolio. That is not something you want to get lost in. I found this park here. Walking through. Nobody's here, so I figured I'd record a video. Get my bearings. Your portfolio is not something that you want to get stuck on. You want to know what you're doing. You want to have the ability to decide where your money goes. A lot of people don't know. They don't know where to put their money. They don't know how to invest. And I think there's just a few simple, basic tips that I can give. People put their money into different things like, for example, growth stocks. And I think that's great. It's fantastic. However, if we were to put our money into a more diversified set of assets altogether, I think we could really benefit from that. That's my point here. And what do we do? How can we do this? Well, a lot of people generally only exclusively invest in the stock market, whether that is real estate or whether that is actual stocks. So I think that people could absolutely get their hands on real estate and gold and commodities and business and be able to turn up better after all of it. Okay, this is the real key here, because a lot of people, their money is tied to the stock market growth, and that is fantastic during a bull market, but it is terrible during a bear market. And it is those who don't lose money that do best in the end, because we're not investing over a 5-year period or a 10-year period. We are investing over decades and decades. And that's the difference between the amateur retail investor and the institutional investor. That institutional investor, yes, they're worried about quarter to quarter performance, of course, absolutely. But the mindset here is over decades. And if you are always concerned about the little fluctuations that could occur, you're never going to see it over that time period. Look, Jack Bogle, the inventor of the ETF, said he only views things in 10-year time horizons. Now you might think to yourself, well, okay, because the stock market's going to rise after 10 years. And that is true. In general, what we have seen, the inflation of these assets have brought things up to these lofty levels. However, what stocks are the ones that come up on the other side? That's what people aren't considering. And that's why you have assets that are there, like Ray Dalio's all-weather portfolio, that they include being the gold and the commodities, because ultimately in tough times they do well and they keep your portfolio, and by the way, bonds too, that's what they say anyway, is to include those simply because they are able to get you some, let's say, the lack of loss, if you want to think of it like that, when all other assets are losing. So that's how these portfolios still can actually provide gains, or at least a reduction in loss during tough times. It's not going to work all the time. It's not going to be fantastic all the time, of course. But in general, you move through the decades and you increase that which you have. Now, second part of this is that you need to take advantage every single way you can in the tax system, because the tax system today, it's written for the elite. It's written for the few. But people out there, if they would only be able to look at what the simple things that they could do for themselves to change a lot. Look, if you're investing in a Roth IRA, look at Peter Thiel. The guy put in, what was it, something like a small amount, and it became like $9 billion or whatever it was. It was some ridiculous number. And that enabled him to make an extremely large tax-free gain. People could be taking advantage of it, but they don't. They use the 401ks. They use the traditional means of investing, and they're not taking advantage of the tax shelterings. These are things that you should be doing. You should be taking advantage of that. But people say to themselves, well, my employer's going to match it, so I'm going to do it, and that's it. That's the end of that. But you're not understanding the tax implications. Tax implications are huge. It's the number one expense you'll ever have in your lifetime. So we should be aware of it. All right. Hope this is helpful to you. I'm just kind of walking in a circle here. My arm is getting tired. I'm going to stop this video soon. I just wanted to talk to you about that. This would make a good live video, actually. Not exactly sure where I am. Need to find where need to find where I am. But I thought to myself, what is the biggest challenge that people have? And it's definitely with their portfolio, because I've seen the portfolios of people, and it is so weak. So I hope that I could be of some benefit to you, and especially in the future. I'm planning on changing things with the channel, and I'm going to be including, so for instance, if I do a video about debt, I'm going to include information about getting out of debt and what are the things that you can do as an individual. If I do a video about the stock market growth, I could do include information at the end in an infographic style, so every video would end with some sort of infographic to make people aware of what they can do. Simple things, infographic style, shareable style, so that they can ultimately benefit from the volatility, that they can take advantage of these situations, and of course they could be better protected. You know, there's a big controversy right now with Bitcoin and gold. I just want to talk about that quickly, because I think a lot of people are missing a little creek here. A lot of people are missing the big story, and that is, what income are you going to have when, you know, the days come when you don't have your primary source of income? Do you have a primary source of income at this time? Yes. Okay, great. Do you have a secondary source of income? For a lot of people, the answer is no. They have their 9 to 5, and then they have, you know, their 401k, their retirement accounts. And so there's this battle between gold and Bitcoin and so on. But I think we should be having another discussion, and that is, what are people doing with when the stuff hits the fan? What are they going to do for income? Because you need income to pay the bills. You don't want to sell off your assets. Assets should be accumulated over a long period of time. That's what I think anyway. So there's this debate, Bitcoin, gold, silver, and we should have assets. We should have a diversified portfolio of assets. But we should also have a diversified portfolio of income. They said that the average rich person has 7 sources of income. That would be nice, but 2 would be good as well. A lot of people, they have dividend stocks, but then they just reinvest the dividends. So they're not really taking that cash, and they feel that that's the right decision. However, we got to watch out. We got to watch out where our money is. We got to watch out where our investments are. And I think that's important to be prudent more now than ever. Thank you.